If you bought QQQ last quarter, you lost money. But if you followed this strategy I'm about to show you, $500 could have become $180,000. I'm about to expose the 3 ETF mistakes that are killing portfolios and reveal the AI secret that nobody's talking about. Stop! Before you throw another dollar into QQQ, you need to see this. I just discovered something that will completely change how you think about ETF investing, and it involves AI taking over the market in ways nobody's talking about. The shocking reality of 2025. Here's what's happening right now that most investors are missing. While everyone's celebrating QQQ's historic 379.14% cumulative outperformance as of March 2025, the smart money is quietly positioning for something massive. QQQ actually declined by 8.11% in Q1 2025. But here's the kicker. AI ETFs and Bitcoin ETFs are absolutely crushing traditional tech. The iShares Bitcoin Trust became the 3rd largest ETF inflow recipient in 2024 with $37 billion in new money, beating out nearly 4,000 other ETFs. Meanwhile, VGT returned negative 11.4% year-to-date in 2025 because traditional tech is getting disrupted faster than anyone expected. The ETF industry just crossed a monumental milestone. Total assets under management hit $14.8 trillion worldwide in 2024, with record-breaking net flows of $1.88 trillion. Here's what they're not telling you. 96% of surveyed investors plan to increase their ETF allocations in the next 12 months, and 3/4 expect to increase their investment in cryptocurrency-focused ETFs. If you invested $500 monthly in the old SAFE ETF portfolio, you'd have decent returns. But with AI-focused strategies and crypto integration, we're talking about generational wealth potential. AI could contribute $15.7 trillion to the global economy by the end of this decade, and early positioning could be the difference between retirement and generational wealth. Mistake number 1. You're still investing like it's 2020. This is the biggest mistake I see everywhere. You're still investing like AI is just another tech trend, instead of the complete economic revolution it actually is. Everyone's obsessed with QQQ's 13.81% compound annual return over 30 years. But they're missing the massive shift happening right now. We're entering the 3rd year of AI's build phase, and the largest 10 stocks in the S&P 500 now trade on 29 times forward earnings, while the rest trade at 19 times. This valuation gap is unsustainable. But here's the shocking part. JP Morgan predicts a catch-up scenario where broader markets close this gap, meaning diversification is about to pay off huge. As T. Rowe Price's Jennifer O'Hara Martin says, the easy money in AI is over. The next wave requires strategic positioning, not just buying the biggest names. Active ETFs are exploding right now. In 2024, active ETFs added 424 more funds than passive peers and collected $293 billion in new inflows. Investors are leaning towards active products to seek relative outperformance and manage market volatility. Over half of respondents in the latest global ETF survey plan to sell index-based ETFs as they dive deeper into active strategies. The AI opportunity everyone's missing. Global X Artificial Intelligence and Technology ETF AIQ, Robo Global Robotics and Automation ETF Robo, and iShares Robotics and Artificial Intelligence ETFs are positioned for explosive growth. These aren't just tech funds, they're picks and shovels plays on the AI revolution that's reshaping every industry. But here's the viral secret. Social media sentiment is now driving massive market moves. A single viral post can make meme coins double overnight. Smart investors are tracking social sentiment indexes alongside fundamentals because spikes in social media attention often precede short-term volatility and massive trading opportunities. Mistake number 2. Overlap without purpose. The hidden tax. Mistake number 2. You're buying the same stocks 5 different ways and paying fees for the privilege. Look, I get it. QQQ and VGT both have massive historical returns, but here's the reality check that'll blow your mind. VGT's top 3 holdings, Apple, Microsoft, and Nvidia, account for over 47% of its portfolio. When you add QQQ, which has 93% overlap with VTI, you're basically betting your entire future on 3 companies while paying multiple expense ratios. That's not diversification. That's concentration risk with extra fees. You're essentially paying to own Apple, Microsoft, and Nvidia in 4 different wrappers. This overlap problem is getting worse, not better. As U.S. domestic equity has weakened in 2025, smart investors are regaining interest in international opportunities. China has unexpectedly stolen the show after earlier tariff fears, with the Crane Shares Hang Seng Tech Index ETF KTech and Roundhill China Dragons ETF DRAG both up 38% year to date. European ETFs are dominating the top performers. The Global X Defense Tech ETF SHLD has stood out as European countries gear up for potential geopolitical conflicts. These aren't just regional plays, they're strategic hedges against U.S. tech concentration. The smart diversification play for 2025: 30% core holding, VTI for broad market exposure, 25% AI/innovation ETF for growth capture, 20% international exposure, China tech or European defense, 15% crypto ETFs, Bitcoin and Ethereum, 10% emerging themes, social media, defense tech, clean energy. This allocation captures stability and the viral trends driving markets while eliminating the expensive overlap trap. Mistake number 3: ignoring the crypto revolution. Mistake number 3: you're treating crypto like a sideshow instead of the main event. This is where most traditional finance experts get it completely wrong. They're still debating whether crypto belongs in portfolios while institutional money is flooding in at unprecedented levels. Bitcoin ETF inflows hit $150 million in a single day in May 2025, and the correlation between tech stocks and cryptocurrencies is stronger than ever. Here are the numbers that'll shock you. Spot Bitcoin ETFs reached total assets of over $70 billion by the end of 2024, with the iShares Bitcoin Trust, IBIT, holding $56 billion in assets, more than the iShares Gold Trust. IBIT is now the 32nd largest U.S. ETF in existence, but this is just the beginning. Analysts at Bernstein project Bitcoin could hit $200,000 by the end of 2025, up from their previous target of $150,000. They expect spot Bitcoin ETFs to account for around 7% of total circulating Bitcoin supply by 2025 and 15% by 2033, with potential assets under management of $3 trillion. The regulatory landscape has completely shifted. With Trump's crypto-friendly administration appointing leaders like Paul Atkins to head the SEC, we're seeing systematic debanking policies end and strategic Bitcoin reserve proposals emerge. Trump Media just announced a $2.5 billion Bitcoin investment, and major corporations are following suit. The viral crypto opportunity. Multiple spot ETF filings are pending for Solana, XRP, and other major cryptocurrencies. When these get approved, and they will, we'll see the same explosive adoption pattern we saw with Bitcoin ETFs. Early positioning in broad crypto index ETFs like the proposed Bitwise Bitcoin and Ethereum fund could capture this entire wave. The social media market revolution. Here's what nobody's talking about, but everyone needs to understand. Social media has become the single most powerful force driving market sentiment and price movements in 2025. Research shows that cryptocurrency performance is directly correlated with social media engagement. Cryptocurrencies whose engagement coefficients have extreme values often see massive price swings. We've seen viral tweets drive Bitcoin ETF inflows, and social sentiment indexes are becoming as important as traditional technical analysis. The platforms driving this revolution? Twitter, X, Discord, Telegram, and Reddit are the biggest social media platforms for crypto and investing discussions. Meme coins can double overnight after viral content, and social media attention often precedes short-term volatility and massive trading opportunities. Smart traders are now monitoring social sentiment alongside fundamentals. When engagement spikes on specific tokens or ETFs, volume typically follows within hours. This isn't speculation, it's the new reality of how markets move. The 2025 portfolio that actually captures viral trends. Here's my updated allocation for maximum viral potential and wealth creation. Core Foundation, 55%. VTI, 25%. Broad Market Stability, QQQ, 15%. Proven Tech Winners. International Developed Markets ETF, 10%. Geographic Diversification. Emerging Markets ETF, 5%. Growth Capture. Future Focused Growth, 45%. AI/Robotics ETF, AIQ or BOTS, 15%. Bitcoin ETF, IBIT, 10%. Multi-Crypto ETF, 5%. Defense Tech ETF, SHLD, 5%. Social Media Creator Economy ETF, 5%. Clean Energy/Innovation ETF, 5%. This portfolio captures both stability and the explosive trends driving 2025 markets. You're positioned for the AI revolution, crypto adoption, geopolitical themes, and social media-driven opportunities while maintaining enough traditional exposure for stability. The 3 predictions that will define 2025. Prediction 1. Bitcoin crosses $200,000 as strategic reserves and ETF adoption accelerate. The crypto bull market persists through 2025 with institutional adoption reaching critical mass. Prediction 2. AI ETFs outperform traditional tech ETFs by 50% plus, and the everything becomes AI trend accelerates beyond current mega-cap tech concentration. Prediction 3. A major ETF experiences a high-profile meltdown due to capacity constraints, awakening investors to the risk of narrow strategies, but accelerating the shift towards active management. Why this matters for your financial future. The investing game has fundamentally changed. The old 3-fund portfolio is dead. Buy and hold forever strategies are being disrupted by rapid technology change and social media-driven market dynamics. Buffer ETFs now have $45 billion in assets, and investors seek downside protection. Active ETFs collected $293 billion in 2024 versus $139 billion for strategic beta ETFs. Single stock ETFs are proliferating as ETFs become trading tools rather than just long-term investments. We're seeing the emergence of everything ETFs, double-leveraged micro-strategy exposure, covering calls on AI stocks, and even carbon credit futures combined with Bitcoin. The ETF wrapper is expanding beyond its passive roots into sophisticated strategies that require active monitoring and rebalancing. The bottom line? Don't get left behind. The ETF industry is experiencing its most dramatic transformation in decades. Total ETF assets could reach $25 trillion by 2030, driven by innovation, technology, improvements, and expansion into new markets. But the biggest opportunities are happening right now in 2025. If you're still debating whether AI belongs in your portfolio, whether crypto is too risky, or whether international diversification matters, you're already behind. The smart money is positioning for the next decade, while others are fighting yesterday's battles. The correlation between social media trends and market performance is only getting stronger. Viral content drives real money flows. Meme culture influences serious investment decisions. And social sentiment analysis is becoming as important as traditional fundamental analysis. Your action plan. Start with small allocations to test these strategies. Dedicate 10 to 15% of your portfolio to AI innovation themes, another 10 to 15% to crypto ETFs, and monitor social media sentiment around your holdings. Track engagement metrics alongside price movements. Position for the trends that are reshaping markets, not the ones that dominated the last decade. The biggest risk isn't volatility. It's being positioned for yesterday's market while tomorrow's wealth-building opportunities pass you by. The ETF revolution is accelerating, and 2025 might be the year that separates the early adopters from everyone else. Don't just invest. Invest with viral intelligence. The markets have changed, and your strategy needs to change with them. Here's to your investing success. Profitable investing.